Okay, so this will be a quick introduction to business combination. This material came from the book of Milan. So I suggest, if you have the time and resources and you want to buy a book, this is one of the books that I recommend. Okay, it's Afar by Mr. Milan. I think it's found in volume 2. Okay, so let's start. Okay, we are now here on slide 1. Wait, I'll just do some quick settings. Siyempre, yung favorite pen natin, kulay red. Okay, so first things first. Of course, we should know the definition of business combination. Now, when we say business combination, okay, this is a transaction or event in which an acquirer obtains control of one or more businesses. Palitan nga pala natin ito ng yellow. Ayan, para mas maganda. Now, when we say control, we're going to have a separate discussion for that. Okay? Pero as of this point, I want to emphasize that this is one of the most important things that you have to understand when we are talking about business combination. Because one of the common questions here in business combination is, when did it took effect, yung business combination? And most of the time, the answer is when there is control. Okay, so, ayun. Now, basically, when we talk about business combination, okay, you'll be encountering a lot of terms like, you have consolidation. Ayan, let me write it down. Consolidation. Now, when we say consolidation, it could pertain to consolidation of financial statements or consolidation of entities. Ayan, an example of business combination. Consolidation is when two entities, if you try to combine them together, okay, Control Z, ayan. Wala palang Control Z ito. Wala po akong balak na mag-edit, kaya pag nagkamali po ako dito, sorry na lang po tayo ha. Ayan. Okay, kunyari may kausap ako. Okay, so consolidation is when two or more entities combine and they form a new entity. Okay, so what will happen to the old entities? They may be dissolved, and continue as separate divisions of the newly created entity. Ayan, so that is consolidation. Okay, business combination by consolidation. Iba naman po yung consolidation of financial statements because that is applicable for stock acquisition. I will explain that later. Anyway, this is the first example. Ayan. Oops, let's go back. That's the first example of business combination. Okay, another one is your merger. Okay, so let me write that down. Merger. Ayun. Okay, so what is a merger? This is a business combination wherein, okay, when you try to combine A plus B, when you combine two or more entities, you will have A or B. Ayan, under merger, okay, the entity that is acquiring or the acquirer, okay, will be the surviving entity. And the acquiree, will be the company that will be dissolved. Okay po? So, kunyari, A, okay, acquired B in a business combination classified as merger, the surviving entity will be A and B will be dissolved. Okay? So now I use the term acquiree. Ayan, acquiree versus acquirer. Dapat alam natin itong mga to. Pag sinabi nating acquirer, the one that is acquiring. Okay, and acquire is the one that is being acquired. Okay, so if you try to apply that in consolidation, letter C will now be the acquirer. Ayan, acquirer. And A and B will be the acquiree. Most of the time, the acquiree will be dissolved. Here in merger, A will be the acquirer and B will be the acquiree. There you go. So you now have your consolidation and you have your merger. In some books, they call it statutory consolidation, and then you have here your statutory merger. Okay, now under statutory merger, there are two kinds, no, merger through the acquisition of net assets or assets, and merger through acquisition of stocks. Ayan, i-discuss natin yun soon. But as of this point, okay, what I want you to remember when we say merger through acquisition of assets, what is being acquired is the net assets. Okay? Net assets. Most of the time, assets nga lang eh. Okay? The acquiring company or the acquirer will acquire or will buy the assets and some of the liabilities, pag minsan i-assume. Okay, so we just use net assets of the acquiree. Okay? And then, madi-dissolve yung acquiree. Okay? And then you also have yung merger, okay, wherein your stocks, ayan, are being acquired. So you have consolidation, A plus B equals C, and merger, A plus B equals A or B. We also have one more. This is now by stock acquisition. Okay. Sir, di ba ito stock acquisition din? Now take note, in merger, the acquiree will be dissolved. In business combination through stock acquisition, when two or more companies combine, okay, no one is dissolved. You still have A and B. But there will now be a parent and subsidiary relationship. So let me write that down. You have the parent. There you go. And you have the subsidiary. How do I spell that? Subsidiary. Ganyan yata. Okay, so when A and B combines, no, and assuming A will be the acquirer, A will be the parent. And the acquiree, okay, the acquired company, will now be the subsidiary. So they will still continue to exist as separate entities. Okay, they will have their own operations. But then at the end of the year or at the end of the accounting period, you will now report them as one entity. That is when two become one. And because of that, they're going to prepare a consolidated financial statement. So, yung sinagamit yung term na consolidated or consolidation dito. Okay, now consolidation, okay, as a form of business combination, ito yun, two combining entities, both of them will be dissolved and there will be a newly created company. Dito naman, okay, we use the term consolidated financial statements to refer or to pertain to the process of preparing one financial statement for different companies that are presented as one economic entity. Okay po? So, there you go. Types of business combination. You have consolidation, you have merger, and then you have your acquisition. Okay, you have the acquiree, the company that is being acquired, and the one acquiring or the purchaser is known as the acquirer. Okay po? So, ayun. So, in consolidation, two or more companies combine, both of them will be dissolved, and there will be a newly created company. For mergers naman, okay, two or more companies combine, and then the acquirer, okay, will be the surviving entity, and then the acquiree will be dissolved. Two kinds of statutory merger. You have the merger through the acquisition of net assets, and you have the merger through acquisition of stock. Okay, so ayun. Acquisition of stock. Siya rin ba to? Iba po yun. This one, business combination through acquisition of stock. Okay, this is when A and B, okay, combines, and then at the end, you still have A and B operating as separate entities. And then at the end of the accounting period, you report them as one common entity. May difference po, di ba? This one, both of them will survive. But in merger, one of your combining entities will be dissolved. Okay, so that's your business combination. Now, nabanggit ko kanina yung control. Okay, what is control? Now, sabi dito, an investor controls an investee when the investor is exposed. Exposed na yan. Has rights to variable returns from its involvement with the investee and has the ability to effect those returns through its power over the investee. Okay, so in short, when we say exposed and has the rights to variable returns, okay, kapag naging owner na siya. Let me write that down. Diba, when you are an owner, you will be exposed to risks. Ayan. Okay, the risk of the acquired entities will now be available to the acquiring entity. That's why you are involved or exposed to these types of risks. And then, has rights. Okay, this means that you can now make decisions to variable returns. It's pertaining to your net income. So in short, okay, you have a control if you are now considered as an owner. Now, control is normally presumed to exist when the ownership interest acquired in the voting rights of the acquiree is more than 50% or 51% of more. I prefer this definition, more than 50%. Why? Okay, because 50.00001% is not 51%, but still more than 50%. And if it's more than 50%, okay, we use the term majority. You now have the majority interest. Okay po, kahit 50.0000001% pa yan, it's still the majority interest. Okay, it's possible because we're talking about percentages. Okay, now take note, they use the term presumed, okay, to exist. Okay, in short, when the problem is silent, di ba, uso sa accounting, when the problem is silent and the interest or the ownership is majority, ayan, or more than 50%, okay, we presume that you now have the control. Okay, pero there may be indicators kasi wherein even if you have more than 50% but you don't have control, okay, pwede yun. It could be done through an agreement. Diba? Anyway, we'll talk about that soon. Okay? As of this point, I just want to emphasize that it's safe to assume that if your interest is more than 50%, ibig sabihin nun, out of the total stocks issued, out of the total outstanding stocks issued, if you own more than 50% of that, okay, so, ayan, if you have more than 50%, 0.0001. Ganun dapat, no? Okay? Then it's safe to assume that you have control over the entity. Now, as a continuation, it may exist even the acquirer holds less than 50% interest in the voting rights of acquiree, such as in the following cases. So, ayan, basahin natin. Mabilis lang to. The acquirer has the power to appoint or remove the majority of the board of directors of the acquiree. Okay, who are these board of directors? But these are a group of people who are representing the shareholders, no, in the everyday decision making of the company. So if you have the power to appoint these people, then you have an influence, a significant influence over the decisions. Diba? So, ayun, meron ka ng control, even if you have less than 50%. Okay, or the acquirer has the power to cast the majority of votes at board meetings or equivalent bodies within the acquiree. Imagine, no? Even you have less than 50% interest, but you have the power to cast majority of votes. Paano kaya yun? Okay, may tinanong ako dati So sabi ko, sir, paano ba yun? Okay. You don't have the majority interest but you have the power to cast the majority of votes. Okay? Sometimes, may sinabi sa akin, there are some special agreement. Am I supposed to write this down? Special agreement wherein hirap magsulat. Meant, wala na pala dun. Ayan na. Special agreement wherein, let's say, a person or an entity, okay, was able to help another entity, okay, and then when the entity was acquired, okay, as a favor, sasabihin nila, okay, except for Mr. A, okay, we're going to allow him to have 2 counts, okay, for each, or 2 votes for each stock that is held on. Yung mga ganung bagay. Okay, normally 1 share should be equal to 1 vote, pero sometimes they can agree on certain levels daw. So that's how it was explained to me before. Okay, so ayun, kung bakit there are plenty of reasons daw, like for example, okay, because of the approval or issuance of bonds, condonation of debt, let's say donation of some a significant asset that is used in operations, something like that. Okay. Anyway, in number 3, the acquirer has power over more than half of the voting rights of the acquiree because of an agreement with the investors. Okay, so this one has something to do with the agreement with the corporation or with the entity. This time, agreement with investors. Ayun, yun yung pagkaka-explain sa akin nun. And then number 4, the acquirer has power to control the financial and operating policies of the acquiree because of a law or, ayan na naman, or an agreement. So even if you're just holding 19% or 25%, okay, but let's say you are the president. If you are the president, do you have the financial and do you have control over financial and operating policies of the acquiree? Pwede, di ba? Ayan. Anyway, let's continue. Accounting for business combinations. Ayan. Business combinations are accounted for using the acquisition method. Okay. Before, this is not known as acquisition method. This is known as the purchase method. Pareho lang naman, di ba? Okay. Pero mas class daw kasi pakinggan ang acquisition. Ayan. Mas class daw kasi pakinggan ang acquisition method. Before we have 2 kinds, no? You have your purchase method. Let me write that down. You have your purchase method and you have your versus and you have your pooling of ba't nawala? Come on. Pooling of interest and interest. Ayan. Okay. Let me erase that. Gaya nga ng sinabi ko, ayaw ko nang mag-edit, kaya pag nagkamali ako, sorry na lang. Okay, so let me change that for you. Okay, so this is ganito na talaga ang buhay natin. Purchase or dito ko na lang sulat. There you go. Pooling of interest. Come on. Yes! Okay, so you have purchase or pooling of interest. I will explain this later. As of now, let's talk about purchase or the acquisition method. Okay. Under this method, the acquirer can be identified. Okay, so ayun. What if the acquirer cannot be identified? Okay, it has to be identified. Okay, but what if it cannot be identified? Before you can use the pooling of interest wherein the acquirer cannot be identified. Okay, under pooling of interest, it's more like a consolidation, no? Pero paano ba? There is no acquirer and acquiree. Ayan. Under purchase, there is an acquirer and there is an acquiree. Anyway, let's continue. Determining the acquisition date. Okay, so the acquisition date also has to be identified. Okay, and this has something to do with control. Ayan. Recognizing and measuring goodwill. Oh, by the way, under pooling of interest, you cannot determine the acquisition date because it's a very slow transition. And then also in the pooling of interest method, okay, there is no goodwill. Net assets will always be recorded at their book values. Okay? So, ayun. I'm just mentioning this, okay, so that you will understand the difference of purchase and pooling of interest, because, you know, there might be a time wherein you might be answering an old book, an old test bank, and then this will be used. By the way, this is no longer included in the CPA board exams. Naku, balik tayo. Okay. So, ayan, in our new standards, we just use the acquisition method. Okay, recognizing and measuring goodwill. This requires recognizing and measuring the following. Okay, your consideration transferred. There are a lot of elements here. Syempre, hindi mawawala yung cash that is given out or the fair market value of securities. Okay, securities that are issued. Basta yung mga assets that are given out. Okay, so let's just put etc. Diba? As an acquirer, meron kang isu-surrender. So that is now your cost. And then you have your non-controlling interest in the acquiree. Okay, so what's this non-controlling interest? This is also known as your minority interest. Okay, if you've heard of this term, the minority interest is actually the opposite of majority. So if you acquired 60%, then the minority interest will be 40%. Letter C, previously held equity interest in the acquiree. Okay, so previous investments from acquiree. And then identifiable assets acquired and liabilities assumed on the business combination. Okay, why do we need this? Okay, why do we need to identify all these items? So that we can compute for the goodwill. Ayan. Later, I'm going to show you how to compute for the goodwill. Okay. How do you identify the acquirer? The acquirer is the entity that obtains control of the acquiree. O, di ba? So, kung sino talaga yung may control. The acquirer is the business that the acquirer obtains control of in a business combination. Okay. Example ng instructor ko dito, no, because it's business combination, this is when two become one. Okay, so in the olden days, no, marriage, no, is viewed as the husband acquiring the female. Ay, noon yun. Okay, so ang tanong dito, well, does the husband has the absolute control over the wife? Di ba? Baka it's the other way around. Okay, so yun yung joke ng instructor ko nun. Siyempre, pag nag-joke yung instructor nyo, kunyari, tatawa kayo. Ang tawag po doon ay classroom participation. Pero ngayon, hindi ko kayo mabigyan ng points sa classroom participation. Hindi ko alam kung inaantok kayo ngayon or kung nakikinig pa ba kayo hanggang ngayon. Anyway, the acquirer is normally the entity that transfer cash or other assets and incurs liabilities. Okay? So, ayan, malinaw siguro to. Transfers cash or other assets. Yung cost na ibinayad mo, yung binigay mo dun sa ina-acquire mo. Sir, but what about incurs liabilities? Ikaw na nga yung bumili, ikaw pa yung nagkautang. Sometimes you can have an agreement of, let's say, 10 million pesos, but then the fair market value of the assets transferred or the cash is only, let's say, 9 million. O, di may liability ka pa na 1 million. Okay. Ayan. Issues its equity interest except in reverse acquisition. We will have a separate discussion on reverse acquisitions. But this one, okay, when in your agreement, aside from cash and other assets, you're also going to issue equity interests to the owners of the acquiry. Ayan, kasama yan sa acquisition cost. Receives the largest portion of the voting rights. Okay, take note, voting rights na yan, ha. Okay. Has the ability to elect or appoint or to remove the majority, dominates the management in the combined entity. Dominates, yun yung mga keywords niyo. Significantly larger of the combining entities and initiates the combination. So that's how you identify the acquirer. Okay? How do you determine the acquisition date? Eto na yung sinabi ko kanina. It's always based on when did you obtain the control. It's not when the acquisition cost, no, the cash, the securities, or the fair market value of assets that are sacrificed. No, it's not when these items are transferred. Okay, it is when, okay, the control has been transferred. Ayan. Ibig sabihin, kailan ka ba ulit nagkakaroon ng control? When you are exposed. Now, if you remember, no, if you are exposed and then you have a sharing the variability of returns, ayan. Ibig sabihin, when you are now an owner. This is how you measure your goodwill. You have consideration transferred plus the non-controlling interest in the acquiry. Okay, previously held equity interest in the acquiry. Total, that's now your acquisition cost. Okay, and then less the fair market value of net identifiable assets acquired equals your goodwill if it's positive, negative goodwill if it's negative. But we don't use the term anymore, no? Yung negative goodwill. Instead, we use the gain on business combination or gain on a bargain purchase, which will be recognized, okay, immediately as a profit or loss in the period the business combination took place. Okay, now if you are reading a material and then it used the term negative goodwill, aba, red flag na yun. Pero it's possible to use negative goodwill instead of gain or bargain purchase. Pero if there is negative goodwill and then that negative goodwill has been amortized, naku, that's already an old material. Kasi ang bago ngayon, most of the time we use gain on bargain purchase and definitely should be reported as a profit or loss. Okay, so that's the recognition of goodwill. Malapit na po yata tayong matapos. Consideration transferred. Ano ba tong mga to? Sinabi niya. It's always measured at their fair market value. So you have the cash, other assets that are given to the acquiree, a business or a subsidiary of the acquirer. Okay, so I'm giving you one of my subsidiaries. Bibigay niya sa mga stockholders ng ka-merge niya. Okay, so that can also be considered as part of the consideration. Parang naulit. Take note, it's measured at the fair market value. So kailangan mo siyang ipa-assess. Contingent consideration. We have a separate discussion on this, no? Pero ang kailangan nyo lang naman tandaan dyan, okay? Contingent, okay? It will become part of your consideration if, number one, it is probable, highly probable. Ayan, it's probable. Okay, probable, and of course, number two, it can be estimated. Reasonably estimated. That's the term na ginamit. Estimated. Tama ba yan? Ordinary or preference equity instruments, options, warrants, and member interest of mutual entities. In short, other securities. And other securities that are sacrificed. Okay, basta lahat ng ibibigay mo sa acquiree, this will be considered as your consideration. Okay, consideration kasi tayo ng consideration. Okay, we can also use the term cost of business combination. Ayan. Acquisition cost, ganun. Okay, acquisition related cost. Okay, these are costs that are incurred, no, because of the business combination. And most of the time, they are recognized as expense, Okay, basta it's related o expense na kaagad yan. Except when these are the cost to issue debt securities because they are measured at amortized cost, sabi daw. So, you have to include that in the initial measurement of the resulting financial liability. Okay, so, paano ba to? You decided to issue a bonds, no? O kunyari, ganito, acquisition, let's agree on acquisition cost of 10 million. I only have cash of 9 million. O sige, I will incur a liability. Bibigyan kita ng 1 million na bonds payable. Tama ba? So, now you have, bakit bonds? Ba't balance? Wait lang, burahin natin yun. Nakakahiya naman sa inyo. Pwede ko naman siyang i-edit, pero hindi ko lang talaga feel. Okay? Tadaan! Yan, para makapagpahinga naman kayo. Tada! Bonds. Ayun. Bonds payable. So, the cost to issue these bonds payable will be included in the initial measurement of the resulting financial liability. Okay, so, maidadagdag dito. Cost to issue equity securities. They are accounted for as deduction from the share premium soon. Kapag nag-journal entries na tayo, ayan, di ba? Meron kang debit sa common shares, credit sa common shares pag nag-issue ka, and then credit to additional paid in capital. But since there are other costs involved, no? Okay, you're going to remove that from your APIC or from your share premium. Now, if share premium is not enough, di balik na naman tayo sa FAR, ubus na yung APIC mo, we're going to use your retained earnings. Okay. Kunyari, nag-enjoy pa tayo. What is a non-controlling interest? This is now your minority. Parang sinulat ko na to kanina. Minority. Or feeling ko lang. Okay, so that's your minority interest. Is the equity in a subsidiary not attributable directly or indirectly to a parent? Okay? So, out of the total voting or outstanding shares, let's say this part right here, 70%, kunyari lang, is owned by the parent, then the minority interest will be 30%. And now, NCI, or minority interest, is measured, no, at a fair market value. Or, okay, the NCI's proportionate share in the acquiree's identifiable net assets. Dati kasi at book value lang ang minority interest. But now, it should be recorded at fair market value. Before, when you acquire assets, okay, you're going to revalue your assets at fair market value. But what you are going to revalue are only the assets that you have acquired, which means those assets that are not acquired, the minority interest remains at book value. O di ang hirap, di ba? Pero ngayon, because of the update, no, everything will have to be valued at their fair market value. Okay, so ayan. Kaya nga lang, ito yung priority, no, at fair market value. Ngayon, ito, anong ibig sabihin nito? The NCI's proportionate share of the acquiree's identifiable net assets. Okay? Pag minsan, this is interpreted to be still stated at book value. Let me write this down. Pwede naman, if what you are revaluing is only the proportionate share of the acquirer's assets. Okay? Pero, yun nga, at the time of business combination, the entire, no, all of the assets and liabilities of the acquiree, whether it will be acquired or not, should be revalued at their fair market value. That's why most of the time, you will see NCI stated at its fair market value. Okay? What about previously held equity interest in the acquiree? Okay, this pertains to any interest held by the acquirer before the business combination. Okay, so kumbaga parang, hey, I'm going to pay you 9 million. Aside from that, I'm going to issue shares of stocks amounting to, let's say, 1 million. And, sige, I'm still going to give you bonds payable. No? So, ayan, 1 million again of bonds payable. But wait, there's more. Before the business combination, I already have an interest or an investment to you amounting to 1 million. Okay po, so all in all, parang ang acquisition cost mo ay 12 million na tumataginting. Ching! Net identifiable assets acquired. Okay, acquired, yung binili mong net identifiable assets. When we say identifiable, shortcut lang. Most of our assets are identifiable except for goodwill. Yun. Di tapos. On acquisition date, the acquirer shall recognize separately from goodwill. Do not include goodwill. Okay? The identifiable assets acquired, the liabilities assumed, and any non-controlling interest in the acquiree. Any unidentifiable asset of the acquiree, like goodwill, unidentifiable, shall not be recognized. Now, the identifiable assets acquired and the liabilities assumed are measured at their acquisition date, again, at their fair market values. In short, the net assets acquired will be total assets minus your goodwill. Pahiya naman ako. Total assets minus your goodwill, you now have your net identifiable assets, right? Okay. Less your liabilities. That's now your net assets or net identifiable assets. Ta-da! And then, wait lang, before I forget, okay, this one you have to compare. Okay, you have to compare this with your acquisition cost. So, acquisition cost, okay, minus the fair market value of net assets acquired, okay, equals your goodwill. Ito, may modifications pa tayo dito. Dati kasi ang goodwill para lang sa parent, pero when it comes to stock acquisition soon, okay, sometimes it appears na parang may share din sa goodwill, okay, yung minority interest in some books. Okay, anyway, I will discuss that as we go along. You have restructuring provisions. Ito, assignment nyo na lang ito. Okay, anyway, it's very easy to, no, it's not easy to understand, but it's not yet relevant as of this point. Okay, we will discuss the details kapag na-encounter na natin siya. Okay, as of this point, iba po ang restructuring sa business combination. Ayun lang. Okay, and then there are also specific recognition principles that should be considered in business combination, and gaya niyan, okay, recognition principles for operating lease, okay, also for intangible assets. Saka na pag may example na tayo dyan, okay. And then you also have the exemption to the recognition principle, okay, on contingent liabilities. Ayan. A contingent liability assumed in a business combination is recognized if the present obligation, it is a present obligation that arises from past events, and fair value can be measured reliably. Ayan. Ano pa? This is just a comparison, no, on how you account goodwill, okay, and then comparing full PFRS and PFRS for SME. There you go. You can just read this. Anyway, I will be giving you a copy. Measurement of non-controlling interest, and that's it. Thank you. So if you have any questions, please don't hesitate to ask questions in the comment section where this will be posted. Pwede siguro sa YouTube, pero since I will be posting this in Facebook muna, of course it will appear in Canvas. Since I'm going to post this first on Facebook, you can post your questions under the comment section. So again, thank you.